Welcome back to our Meet the Marsh Expert series. In this episode, we have our credit specialty leader, Milind Jain, who will be answering some of our questions on the current risks for manufacturers surrounding liquidity. Thanks for being with us today, Milind.
Thanks, Sharifi, for having me here and share my thoughts on this topic.
Pleasure. So, jumping right into it, what are the top liquidity risks facing manufacturers today as you see them?
So we are all aware that the current crisis had a and continues to have an unprecedented impact on global trade, supply chains, and financial markets in comparison to the previous crisis we have faced. And since we live in a globalized economy, the impact in one particular country is likely to have a kind of ripple effect on many businesses and economies associated with it. And we have seen that happening in case of manufacturing companies as well. Now, if you look at manufacturing companies in particular, we know that it's a quite wide industry. It can have companies from food to automobile manufacturers. So all would have faced similar challenges due to the core nature of their business. But at the same time, the impact of the crisis and the recovery is going to be different depending on the sector they operate in. And the three core risks which we have seen manufacturers facing largely from a liquidity perspectives are access to stable supply chain. So as we all know, manufacturing is not a simply box moving business. It requires a certain quality and quantity of raw material to ensure the consistency of finished products. And if it's not being maintained, it can really pose a big loss and reputational damage for manufacturers. And the advantage of living in a globalized economy is that what manufacturers have done is they have actually contracted various suppliers and companies who narrowly focus on just one area of specialization, which ultimately good for the consumers because they got the quality product. But at the same time, this leaves manufacturing companies vulnerable when they depend on a single source of supply. And if that supplier is based in a particular country where there's a chances of more disruption, obviously this creates a lot of risk in terms of having a stable supply chain. And this is what we have seen at the start of the pandemic when there was a lockdown in China. And we all know China contributes to almost 70% of the global manufacturing, which in a way has created a lot of disruption in the overall supply chain globally. The second thing, if you have to look at from a liquidity perspective for manufacturing, is having a kind of a stable cash flow. So usually manufacturing companies have a longer cash conversion cycle. So they source, work in progress, inventory, and then sales, which usually happens on credit. So it's very critical for manufacturing companies to always have a firm grip on their liquidity position and cash flow, as they may have a lot of requirement which they cannot overlook, like fixed overheads, machinery maintenance, labor costs, and vendor payments as well. And what we have seen in the time of COVID, when manufacturing companies were not working in the full capacity, this really created a kind of a stretched on their financial position, but at the same time, they've also seen delay payments from their customers. So if you look at in MENA region, we have seen like average collection period going up by 60 to 90 days in few industries. And the third thing, which is quite critical, where manufacturers really struggle is ability to meet their debt obligations. So manufacturing companies, as we all know, require large setups with significant capital investment on infrastructure and asset base. And usually these assets are financed by banks, and particularly when a company is in its growth phase, when they need support from banks, and they will have to make interest and principal payments. But at the same time, if manufacturers are having issues in terms of collecting their cash flows or collecting their payments from customers, not being able to work in the full capacity, then it is likely to have an impact on their repayment capacity to banks.
Fantastic. There's some great insights there. And you mentioned COVID-19, but can I ask, has COVID-19 created opportunities within the sector that demand greater liquidity specifically?
Yes, very much. And every crisis, as we all know, creates one fundamental opportunity, and that is to learn hard lessons and faster. The good thing with this crisis is that we have really seen recovery in most sectors happening very quick, and have seen demand getting back to pre-COVID levels in many industries and countries. However, the crisis also made a lot of businesses bankrupt and fragile, and the ones who have been able to survive are actually much stronger than ever. And this gives companies better margins possibility because they've got limited players to compete with now. And at the same time, among our manufacturing client portfolio as well, we have seen a number of our clients looking to diversify and increase their presence in new markets and new geographies rather than relying on the existing setup. And all these, expansion, all these growth objectives would require manufacturing companies to seek and have a stronger liquidity position.
Brilliant. That makes a lot of sense, Milind. Thanks. And I guess the logical next question would be, how would the business go about protecting themselves against risk to liquidity?
Yeah, so it's quite interesting, and we are seeing a lot of manufacturing companies coming to insurance market. So talking about the solutions, credit insurance solutions can really help manufacturing companies address these challenges, and at the same time not to lose their competitiveness in the market, which is, I think, quite critical. And such solutions not only help companies manage their risk efficiently, but also plan their liquidity position in a very structured and a stable way. So solutions like supply chain finance, receivable finance, factoring, and usage of surety bonds can really help manufacturing companies manage their liquidity positions better and also help recover from this crisis.
Fantastic, Milind. That's a great summary there. Thank you so much for being with us today. Some great lessons on liquidity and how it affects the manufacturing industry. Thank you so much.
Thank you, Sharifi. Thank you.